But a good time to get in Gautam Shah, founder and chief strategist, Goldilocks Premium Research, who joins us on the show. Hi Gautam, always good to have you on the show. The market's in a bit of a lull, year-end phenomena maybe. We get a fresh trend from April. But how do you see the headline index shape up, the Nifty and the Nifty Bank?
Well, good morning. I think make no mistake, this market has been in consolidation phase for almost 3 months now. You know, we started the new year at a level of 21,800. And as we speak, we are at 22,000. So 3 months have passed and the Nifty continues to be around the same level. I think ditto for the bank Nifty. So clearly, this is a very healthy pause that the markets have seen after the kind of run up that we saw in November and December of last year. And there has been divergent moves on the indices and in the market in general, because the top 300 stocks seems to be going through a time correction, whereas anything lower, you know, the balance 1500 stocks seem to have gone through a 15% correction collectively. So if you actually study the market breadth, this market has seen a very large correction internally, which does not show up on the technical studies. But I do believe that this consolidation is healthy and this is going to continue for some more time. I think the range is very clear in the form of 21,850 on the downside and 22,250 on the upside. Until we actually don't move past this zone, I don't think you're going to see anything special. So it's almost like a pendulum with a few good days, a few bad days. And I think this is going to continue. But this is still a very theme-specific, sector-specific, stock-specific market. The medium-term, long-term bull trend continues. The liquidity factor remains. All of India's positives remains. It's just that this pause needs a little more time to resolve itself before we can start turning up again.
Gautam, hi. Good morning. Good to have you on the show as always. So if indeed the Nifty is going to punch through this broad consolidation, 500, 600 point consolidation, then which are the heavy hitters? Because none of them are consistently adding up. You know, 1 week it's Reliance, the other week is a little bit of a flare up in IT. Banks continue to sulk, barring the odd, one odd good day. So where are the heavy hitters?
That's quite true, Surabhi, because you don't have too many stocks that are leading this market higher, which has been the problem in the last couple of weeks. You know, in the month of December, you had a scenario wherein all the three big boys, IT, Reliance, and banks, did well. And that's probably the reason the Nifty gradually moved to levels of 22,000 and beyond. Now, if you look at the last 1 month, what you'll realize is that it's just the burden on Reliance, to keep this market safe. And that stock continues to trade around 2,900. But banks have come off in the last 15 days and SDFC does not perform, does not outperform, and that's not helping the entire market. And the IT index in the last 1 week, I think the move has been quite discouraging. So given this setup and given the fact that you don't have too many big boys batting for the bulls, I don't think it's going to be easy for the markets to actually get past that 22,250 number. So I think we're going to stay in this range for some time. And the bigger opportunity could be in the small caps and mid caps, because that's where the big fall happened. And that's where I think things could have stabilized.
So those 1,500 stocks, you started off the conversation by breaking the market into the top 300 stocks, which are in a range and consolidating, and the bottom 1,500, or, the X of those 300 stocks, where we have seen a price correction of about 15-20%. You believe that is done? And what is the opportunity? Can you name some stocks where you think perhaps we've put in a bottom and there is upside from here?
Reema, it's actually quite unique that the market does, things which are completely out of the box, because you have a 2% correction on the Nifty and you have a 12% correction on the small cap index. I mean, that's the kind of disconnect that we've seen in the recent past. But as I said, if you really run through a set of, say, 500, 700 stocks, you'll see that most of them have lost anywhere between 20 to 40%. So I think the cleanup has happened, and you had a scenario where grade C and grade D stocks had started to do well and were being justified at any price. That phase is gone. The men have been separated from the boys. And I think quality mid caps and quality small caps will come back strongly. I mean, I don't want to give you names here, but some of the auto ancillary names, some of the stocks in the hotel space, some of the infra stocks, I think they all look very good. But in terms of overall sectors, I think our preference remains in the form of pharma and metals. I think these are the two spaces which we feel could outperform over the next 3 to 6 months.
Okay, all right. In metals, you want to share any names, or you want to split it up between ferrous, non-ferrous?
I would actually go with the entire space, because the way the charts are, I do see a 20% move on the metals index over the next 6 to 12 months. So that's sizable. And within the metal space, I think the two PSUs which really stand out for us are Nalco and SAIL. And I think both these stocks have the potential to register supernormal gains this year.
Okay, Nalco and SAIL. One would have thought fundamentally they're hitting the upper end of the range in terms of valuations, but technically things are looking up. Noted your point, Gautam. Let's talk about, you said let's separate the men from the boys. Well, part of the men, one group of them is the IT stocks, and you have negative news flow coming in on the fundamental front. How do you think that index is shaping up, and if any ideas out there?
Yeah, I think I have been optimistic all along. For the last 6 months, I've always been a big bull on the IT space. But with what has happened in the last 1 week, I'm a little concerned because there is this big debate in the world and in the market space right now is whether AI is really going to disrupt the IT space in general and the Indian IT services space. I mean, that's the big debate which I like to talk to when I speak to clients. And given what has happened in the last 1 week, I feel that the leadership is gone to some extent. I still like the big names. So I think TCS, HCL Tech remain on top of our list. And I feel whatever the market scenario, you want to be invested in them. But mid-cap IT could be in a slightly difficult space because they were always very richly valued and they were too much discounted into the future, in terms of all the positives. So apart from the top 2 or 3 names, I want to stay away from the IT space just for a bit till things stabilize.
Gautam, what are US charts telling you? I mean, it's been a phenomenal one-way rally there. It's only paused in the last 2-3 sessions. But what do those charts, or maybe the yields, what do they indicate? Is the bull run on?
Well, firstly, there is too much happening on the intermarket stuff because if you look at oil, I think it's setting up for a large rally is what it looks like. Gold and silver have done very well, and I have made this point multiple times that gold is going to be the trade of 2024. So that remains, and I do see levels of 2,500 to even 2,700 on gold. So you want to be committed there. And the dollar index is also, at a point from where you could see a little bit of a bump up. So given all of these factors, I think if you go back to equities, last week, the stance of the Fed, I think basically energized the bulls in the US. But, you can't have an environment where the top 10 stocks keep taking the US market higher because even in the US, the breadth is a bit of a problem. So I think the US markets are going to take a bit of a breather. There could even be a 3 to 5% kind of a correction. And if that happens, it could impact world equity markets, including India. Because, so far, India and US have completely moved hand in hand, but it's not happened in the last 1 month. There has been some underperformance despite the 19,000 crores coming into the system every single month. So there are some issues. One should not, paint this with a very rosy picture. I think this is healthy consolidation. US could also see some correction. Be prepared for that.
What about crude? Is there a risk crude might flare up?
I think there's a very big risk because right now when you talk about, risks in the world of financial markets, I think pretty much elections is a non-event as, when you speak to anybody. But crude, given what it's done in the last 1.5 months, I get the feeling that NYMEX crude is gradually moving towards a level of $90-95. I think people are not factoring that in. But if that were to happen, definitely there could be, some dynamics that could change and people could then start, using crude as an excuse to justify this consolidation or underperformance that India has seen. So yes, there are some near-term risks, but again, it's really a battle between short-term to long-term. Short-term, there are concerns. Medium-term, long-term, this is a great opportunity to do your homework and pick quality stocks, to play the next wave up.
Since you're so positive, Gautam, on metals, I wanted your view on copper. Here, Hindustan Copper, fundamentally things look stretched. But the key trigger is if copper prices are going to move up from here, that's the only pure play copper play here in India. So how would you play it? I mean, what are the levels you're looking at on copper itself?
See, when you talk about metals, you have to look at the China factor. And what I'm told is that the return of China in some sense, I think could be responsible for what happens to the world going forward and what happens to the metal space. I mean, I'm not a fundamental analyst. I don't go into this in detail, but my analysts tell me that could be an important factor. And Hindustan Copper, as you rightly said, I think it's a pure play, a copper play. And I think there is a lot more to come. See, please understand stocks like Nalco, SAIL, Hindustan Copper have been underperformers or non-performers for years. And now they are finding their footing. You know what happened to many of the PSU stocks? They did nothing for about 7-8 years. And when the trend picked up, you don't start looking at valuations immediately. So I think they're going to be stretched. And if the China comeback does happen, which is what it looks like, then I think metal stocks could be beneficiaries.
As they say, right, for everything else, you look at fundamentals. For metals, you look at momentum.
Yeah.
And some of these stocks have the momentum.
And it's interesting, you know, he's saying that metals will do well and pharma will do well. Traditionally, these are sectors that are completely opposite to each other. Pharma is more defensive in nature and metals are all about risk.
And,
yeah, exactly, you know, global
So what
risk
about the pharma index upside? On metals, you believe there is a 20% upside on the metal index over the next 6 to 12 months. On pharma, what would your levels be and your big bets?
Well, Reema, firstly, I think nothing that the market has done in the recent past is out of the textbooks. You know, otherwise you would not have seen the small cap index fall 12% and the internal market sees such a large correction and the indices are steady, because I think sticky money is going into the top 300 top quality stocks. And that's probably the reason every time there is a dip in the top stocks, there is buying interest. And I think this trend is going to stay over the next 6 to 12 months. But talking about pharma, I think some of the stocks are doing so well. I think I'm expecting a 15% move on the pharma index even from here. Sun Pharma remains our top pick. We've been covering this for a while now. Cipla, Dr. Reddy's, Zydus Life, all have great charts and I think will continue to outperform.
Okay, so those are some of the metal names to wrap things up then. Gautam, since you mentioned look beyond the index, look at quality mid caps. You named some sectors, but any interesting names, any charts that are coming up for you that you'd like to leave us with within the large mid caps?
Well, I think I like to play themes. So I think in hotels, if you look at Indian hotels, it's been our favorite for a while now. If you have to play railway, I would still go with an IRCTC. I think that's a big opportunity. If you look at aviation, I think Indigo has been doing really well. And it was a stock which was always due for a big rally. Yesterday was a big move, and I think this is going to continue. So some of these really top quality themes also add chemicals to it. I think we are reaching a point where the chemicals index could potentially see a breakout on the upside. So stocks like Aarti Industries, SRF, could be potential beneficiaries. So we are focusing on all those stocks which have been in consolidation and are now starting to do well.
Okay, all right. Good to see you in Gautam. Thanks a lot for joining in and giving us your take on a whole host of those sectors as well as on the index. Wishing you a good day ahead.